Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Hey, if you're new to the page, you already know. Hit the like, subscribe, and notification bell. If you already done it, you don't have to do it again. Somebody asked, I keep hitting subscribe every time. No, just once. Hey, we got. I just want to dive into some stuff. Yesterday, this platform had some issues and a lot of people didn't see my video from yesterday. I did a video yesterday with Stocks with Josh in Studio C. I will leave the video in this box. Okay, so let's talk about what's going on. There is a lot that's going to happen this week. We got CPI coming. I believe it's Thursday, and I plan on being live with the CPI numbers, and then we have earnings starting this Friday, beginning with banks kicking off earnings season. Okay, so we see what's going to happen. I believe that we're going into a slight earnings recession, though we're going to wait for the data. I can't say 100% we will be in an earnings recession. We already in a recession. I do believe that there's a deeper recession coming, and there's still money to be made. There's money to be made going down. I'm going to show you someone that is making money, and then I'm going to suggest a stock that is a defensive stock that I bought a little on the IPO. And no, I didn't tell the family about it, and I'm going to show you why I didn't in a minute. So listen, there's two short videos that I need you guys to listen to every word, because there's some gems in these videos and quite interesting. These are two separate topics that I wanted to cover, but these guys did on CNBC. Here's the first one.
There's a lot of technical speak out today. Newton over at Fundstrat says the bounce is expected to fail sometime this week. Could happen between Tuesday and Thursday before turning lower to break the December 2022 lows. Overall, key areas of focus lie near 3950 to 3970 as resistance, and 3794 and 3800 as support. And Krinsky's out with a note today as well from BTIG talking about resistance too. There's not a lot of belief that this has a lot of staying power.
Yeah, so you just quoted two of the technicians that I follow and that obviously are friends of the show, and you're right. It's hard to find positivity from them, and that's the way it's going to be until the fundamentals change. Now, on the fundamental basis, I mean, you look at what's gone on in the last couple of months. You've had a series of good CPI reports. You had that good jobs report last week from an inflation perspective. The news has turned better in terms of what the Fed is doing. And I think the markets from a fundamental point of view are facing two questions. One is, how high is the Fed going to go? Not whether they're going to cut. How high are they going to go? And the second is, what impact are those Fed hikes going to have on earnings? So we're going to get some clarity on both of those this week. And I think it matters. I think the CPI matters on Thursday, because if it comes in better than expected, that's 3 months in a row of better than expected. But also, if you get the up 0.1% month over month, that's like 5 months in a row of being at a rate that would equate to 2%. That's good. Okay. Now, earnings, look, there's going to be a pent up effect. We do know that. And that's why earnings estimates for this year have come down from 250 to 230. Are they going lower? That's the big question. We're going to start to get some insight this week from the banks, from Delta Airlines, from United Health. I think it matters. I expect Delta to be really good with what they say. I'm hoping and expecting, frankly, that the banks say the consumer is hanging in there, that they're prepared for the health of the consumer to go down. But as with the last 3 quarters, they're not seeing it yet.
And so there, I agree. We have to see how high the Fed is going, not is he going to neutral or reverse. First, we just need to see how high the Fed is going. And we do know February 1st, the Fed will be doing, I believe, 25 to 50 basis points. And then we need to see, is he going to continue? Oddly enough, on yesterday, what is his name? There was a Fed talking on yesterday, and he was saying that the Fed is willing to go higher. His name is Fed Bostic, okay? Fed Bostic. So for those of you that don't know, there's a whole Fed board. There's state by state Fed. And the worst thing that we could do right now with the Fed is have all of these state by state Feds talking, because the market just keeps moving whenever a Fed moves their mouth. So they all need to have a united message. All right. And so Fed Bostic said that the Fed is willing, he's willing to overshoot with interest rates. Okay. And that caused the sell off right at closing bell yesterday. For those of you that didn't know what happened. But then now the Fed is going to affect the earnings. And so if we're going into earnings recession, and, you know, of course, these companies are lowering their earning expectations in an inflationary, high inflation environment, then that means that the PEs for your companies are going to come down lower. That's what it all comes out to be. All right. And so we, have to look at the PEs of these companies that are just astronomical, and they're going to continue to come down. And unfortunately, tech was overinflated. All of tech. That includes the Apples and the Microsofts and the Tesla, which is a car slash tech company, right? And so they're going to come down, right? And so we have to understand that we have to see what's going on with this so we can understand what's going on with our individual stock, right? So now there is a company that I did buy, and I bought it on the IPO, and it's in the defensive category right now. What's defensive? We know what performs well during a recession, not necessarily on the way down, but during a recession. You guys, you've heard me say them before. We know healthcare, and that's one of the ones we're going to cover. Energy, oil, right? Though I sold my oil when it hit $130 a barrel. Not that I knew it was the top. It was just enough for me, all right? And at some point, you have to take profits, okay? So listen to this and we'll discuss. Excuse the quality. Of course, I just videoed it from my cell phone off the TV.
A stock that seems universally loved, United Healthcare, which you sold.
Yeah, I bought this in the spring of 2020, and I'm up about 100, or was up about 150%. This is a fabulously run company. By the way, they report earnings this Friday and expect it to be very good, another beat and a raise. But it's not cheap. It has outperformed. It is universally loved. And so I'm looking for opportunities. And so I put it into GE Healthcare, which is the spin from GE. One of my picks for the year is GE. Well, GE Healthcare is a great company as well, actually. It's been around for 125 years. They have 1 billion patients, 4 million installed base. 50% of their revenue is recurring, and they're growing digital, which should help growth as well as recurring revenue. And by the way, they pre-announced today positively, better than expected operating margins, 50 to 100 basis points expected better this year versus last year. And that's the real opportunity, because the margins are so depressed from being under and trapped in the GE parent company. So now they're free to do their thing. And they're trading at about 17 times forward estimates. Siemens, which is the biggest competitor, is trading at 23 times. So even if you have the multiple, right, in terms of the margins, even if you increase the margins by 500 basis points, I think they could do more than that. You're still below Siemens, and I still think there's a lot of operating leverage to be seen. So it's going to trade a little funky, because spins usually do right out of the gate. But I do think this one is a winner for the long term.
Now you see how much she made off of the first healthcare company that she mentioned. Okay. Now, you can see that you can make money going down for those of you that are new. Actually, some people will hear this that are skilled with options, and before the earnings of the first healthcare company she mentioned is posted, can still do an option play, do a call, expecting it to be higher and still make money. And if you're not skilled, then you need to take Keenan's class on options, and B, if you're not skilled, don't get into play, all right? Because you can lose it all. All right, but let's go to the second healthcare company she discussed. I'm going to put these on. You guys excuse the allergies. I just want to bring this information to you in a timely form. And let's just look at this, and we can see here that here's why I didn't mention it the day I bought it, okay? So now you said, hey, it was public back in December. No, we could not buy in this period, you and I. Only the big boys could buy in this period. Here's where we can buy. Here it is right here. See here? GE Healthcare shares fall 3% in market debut. This is when it hit the market, right? And I generally do not buy IPOs, and I haven't in the last year because they've all performed horribly. And so I wanted to see what this price action was before I brought it to the family, right? So, I bought it here, and right now I'm pretty flat. So I bought it about right here, right? You never really get the top, and it cools off the day it IPOs. But what I'm going to say about GE Healthcare is everything that she said is correct. Everything that she said, okay? Look at the PE. Look at the PE right here, okay? And for a lot of these companies, especially companies like this, the PEs are a lot higher. Now, this PE may even continue to fall, and I believe it probably will. But I'm going to start dollar cost averaging because remember, this is a defensive play for a recession. Healthcare is one of the areas that do well. So I wanted to bring this to the family, and we're going to see if we're going to make money in this or not. I plan on having this long term. This is nothing that's going to line your pockets right away. This takes time, good people. So I wanted to bring these two. I was going to make two different videos about this, but because they were talking about this on CNBC today, I decided to bring it to you now. Okay. I'm sorry for the choppiness. Watch both videos, take notes. You can make money off of a lot of things I said today. All right. Make sure that you check out the two links below. Get the free stock. Read what the requirements are, and make sure you are watching this video at the end of this video. You guys, excuse my allergies, but they are funky today. We will see you tomorrow morning. Live, love, laugh, and learn. Watch this video.